This is Matthew Cratter from Trade University, and today I want to talk about some new, very evil taxes that are in the works, as well as a huge black pill that results from these. So make sure you watch this video all the way to the end in order to understand the result of this black pill. I also thought about calling this video, How to Be Evil Like Me, Janet Yellen. Whenever I hear her talk about policy, all I can think about is how it's really not an exaggeration to say that this is one of the biggest rent seekers and most evil politicians that really I've ever seen, politicians and central bankers. Not only is she a Keynesian economist, which is just almost like an absurd discipline, not only was she head of the Fed as a central banker, and not only is she a government official and globalist. The one thing we would say is she did not work as an investment banker at Goldman Sachs, so she might have failed to maximize her evil powers. But fortunately, she was able to make up for it with her rent seeking. Between 2018 and 2020, Janet Yellen received over $7 million in speaking fees from companies like Goldman Sachs. This is the revolving door that we have in government. We have it between the drug manufacturers and the FDA, and we also have it between Wall Street and the Federal Reserve. Unfortunately, this is a situation that we're in. And I get this link from this information from the Wikipedia article on Yellen. I'm sure she's actually received a lot more than $7 million in fees. So this is the background to who Janet Yellen is and where she comes from. She's a person who espouses absolutely absurd economic theories. She was in charge of the money printer for a while, and she's the recipient of huge Wall Street largesse. And this is the person who wants to talk about a new tax. This is a tax on unrealized capital gains. And we're going to see where this is headed. If you don't know what an unrealized cap gain is, don't worry about that. I'm going to talk about it in a minute from now. This is being sold as something that most people don't have to worry about, that it's just for billionaires. This tax would apply to people who make more than $100 million a year for 3 years in a row, or if one makes $1 billion in annual income. Now, I think it's very misleading, and this is always the way these policies are sold, if you think that this unrealized capital gains tax will never apply to you. This is what they originally said about the income tax in the U.S. The U.S. did not have an income tax for a very long period of time. I believe there was an income tax for a short period during the Civil War, and then it came in full force with, I believe it was the 16th Amendment in 1913. And what they said when they introduced the original income tax is, trust us, it's only for the very rich, and it won't affect you. I guess it was 1913. There's a 1% tax on net personal incomes above $3,000. The top rate at that point was a 6% income tax. And then by 1944, the top rate had increased to 94%. The marginal rate that high-income taxpayers were paying was basically 94%. They'd get to keep. It's not quite as bad as it sounds because it's a marginal rate, but they would still be giving the vast majority of their income to the government. So this is how taxes work. They're originally rolled out on just a small group of people, and then they're, of course, expanded to the greater population. At this point, almost everyone pays an income tax in the U.S. If you're finding this video helpful so far, be sure to hit that subscribe and like button. And also, I'd encourage you to subscribe to my email list. I'll stick the link in the description notes below. In case I get banned from YouTube, you'll know how to find me, and we can be in contact if you're on my email list. So what exactly does this tax involve? We've talked about it a little bit before, but I wanted to go into a little bit more depth in this video. You basically have a capital gains tax, which is a tax on your profits when you sell a house, when you sell stocks, etc. This is often also called a realized capital gains tax because you actually don't have to pay taxes until you sell that house or you sell that portfolio of stocks or that individual stock. So that's what we have today, a realized capital gains tax, where there are no taxes due until you actually exit the position. An unrealized capital gains tax would mean that you would have to pay taxes on your paper profits. So if you bought Microsoft at 100 and it's now at 200, you would have to pay taxes on that difference, even if you still own Microsoft and never sold it. And again, it's called unrealized because you haven't sold the stock or the house or whatever asset yet. This would also apply to things like a family farm. If you bought a farm 30 years ago for $200,000 and it's now worth $1 million, if this passes and if the bracket is slowly changed to include people besides billionaires, you might end up owing taxes on that $800,000 of unrealized capital gains. This is, if you own $1 million farm today in America, does not mean you're rich or that you're income rich. You are certainly land rich in a sense, but farms don't have huge productivity. So someone who owns $1 million farm would almost certainly not have enough money to pay the taxes on that unrealized capital gains unless they had income from somewhere else or had savings, etc. And so this sort of tax policy would lead a family farm like this to have to be sold just to pay the unrealized capital gains. So they would end up selling it and it would become a realized capital gain. So they would get you if you do, get you if you don't. And in case you think this only applies to farmers, this could certainly apply as well to your primary residence. At first, there'll probably be an exception carved out so you don't have to pay unrealized cap gains taxes on a house that you live in, but certainly rental properties would start to be included. And then ultimately this would be rolled out so you'd have to pay an unrealized capital gains tax on your residence. This is how U.S. government taxes always work. They are a creeping formation. Yellen is very careful to point out and say that this is not a wealth tax. Unfortunately, Nancy Pelosi let the veil slip. She says we will probably have a wealth tax in the new bill. This is certainly a wealth tax, and it's funny that Pelosi is so old and senile that she didn't realize that she's contradicting what Janet Yellen said, that it's not a wealth tax. There is a very interesting tweet here from Brian Cohen that cites a Supreme Court decision in 1920 that basically ruled that Congress was not empowered to tax unrealized capital gains at death. And so this is one reason that when you die, all of your assets, your stocks, and your house are basically, there's a step up cost basis that occurs, and it's as if the asset was bought on the day of your death. It works something like that. You can consult a tax professional to be sure about these things. But basically, the U.S. Supreme Court ruled that if you're going to tax unrealized gains at death, the logical progression of that would be to tax unrealized gains every year when someone was alive as well. And I'll link to this tweet below. And it was ruled unconstitutional. So some lawyers online are arguing that taxing unrealized cap gains would be unconstitutional. Just because something's unconstitutional, of course, does not mean that it cannot happen. We have a lot of infringements on the First Amendment and the Second Amendment happening, and the Fourth Amendment happening today. But this would provide at least some constitutional headwinds to something like this passing. When you read up in this literature, you'll often see something called the Hague-Simmons definition of income. And this is very different from what you and I might consider income. It basically equals the value of a person's annual consumption, so all the money that you spend, plus the net change in the real value of his or her wealth. And this net change in the value of wealth is where that piece of unrealized cap gains would fit in. Now, Hague-Simmons is one of the more evil doctrines. Basically, if you extend it to its logical conclusion, every kind of consumption would end up figuring into a tax calculation. So if one member of a couple, maybe the mother stays home and take care of the kids and cook, under Hague-Simmons, this family should have to pay taxes on her imputed income because her cooking was labor and she was taking care of her kids. And if she didn't do this cooking or babysitting, maybe they would have to pay someone else to do it. So it is a form of consumption. And as such, there should be taxes due on this. This is the kind of thing that economists and academics come up with. And it has real implications for real productive people, not for Keynesians, not for politicians who contribute absolutely nothing to the world in most cases. There may be a silver lining to this. All the articles that I read said that this unrealized cap gains tax would apply to stocks, bonds, real estate, and art. There was no mention of cryptocurrencies. I couldn't find it in the bill. Maybe they will be added. But if it doesn't include Bitcoin, this could be an amazing incentive for billionaires, especially as they would be the first impacted class, for billionaires to sell their stocks and bonds and real estate and art and move the proceeds into Bitcoin as a way of hiding out from the unrealized cap gains tax if it doesn't apply to Bitcoin. Of course, if it does end up being extended to include Bitcoin and cryptocurrencies, how would this be enforced? Simply, a billionaire could just hop on a plane, or anyone, you or I could do the same thing. You could just hop on a plane with your recovery seed from your hardware wallet that contains Bitcoin. You memorize the 12 or 24 words, and then you're able to leave the country with whether it's $1,000 on your Trezor or $10 billion on your Trezor. And again, you actually don't have to bring the hardware wallet. You can just memorize the 12 or 24 words, and you can move the money out of the country that way. Again, this is not a recommendation to commit something illegal, but this is the problem with having laws that are very difficult to enforce. The other problem, of course, is I'm not going to say that all billionaires are the greatest people, but we do have a lot of billionaires that are extremely smart, that have invented amazing technologies, people like Steve Jobs. And so taxing this class or penalizing them can drive them out of the country, can cause the country to lose jobs, etc. And many of these people are very smart. We should want to keep them in the U.S. I want to finish with the biggest black pill of all, because I've talked about this a little bit before, but I think this really, there was a tweet that really laid out the implications of this quite well. This is in the vein of the World Economic Forum saying you'll own nothing in 2030 and you'll be happy. Also combines it with the meme of the Fed's money printer that we've talked so much about on this channel. Someone sent me this tweet from Bobby Schell, How Build Back Better Works, which is what this bill is being called. Print infinite money. So this is Jerome Powell and his money printers. All assets go up. This is what we've been arguing for the past 18 months is going to happen because of the money printers, Bitcoin, stocks, real estate, housing, everything going up. And then this is where the unrealized cap gains tax enters. You then basically pump up the price of all asset classes. You tax unrealized gains, which would apply whether people sell or don't sell their stocks or housing. And in this way, you have a way of confiscating people's assets, not just preventing them from keeping up with inflation, but basically pumping them up so much that the majority of the value lies in unrealized gains. And then you can tax those and thus basically confiscate people's property. You'll own nothing and they'll call it happy. So this is where these are the implications of an unrealized cap gains tax. Vijay Boyapati said it quite well, I think, in this tweet, that an unrealized capital gains tax is basically a wealth tax in a world where the only asset that is not taxed is US dollars, fiat currency. So basically, the only place you can hide from unrealized cap gains tax is keeping your money in cash in the bank. But the problem with this is that even though you won't, an unrealized cap gains tax will not apply to you, you will be taxed by inflation. You'll essentially be taxed, you'll pay a hidden tax by the fact that the prices of everything are going up and you're just sitting there in dollars and your dollars are losing their purchasing power. And so this is an unrealized cap gains tax. The ultimate implication is it's a way for the state to confiscate all of your wealth or the majority of your wealth over time, because no matter how you store it, if you store it in asset classes that go up in price, you get taxed. If you store it in cash, you basically lose purchasing power. And this is a hidden tax. This is how the government devalues the currency and is a way of dealing with its own massive debt load. Now, I would say that the one good news here, the other silver lining, is that we'll almost certainly not see this pass in the next year or so. I don't think there's support in Congress or anywhere really for an unrealized capital gains tax. There's support in very radical academic departments and with people like Janet Yellen. But I don't think there's enough support in the country to pass a tax like this. But I do think something like this will be coming in the coming decade. I think basically Fed monetary policy really drives wealth inequality, drives the wedge between the haves and the have-nots, and that leads to very unfair legislation and tax policy. And so it's almost inevitable that we do end up with an unrealized cap gains tax. I don't think it happens this year or next year, though. And this is something we have to think really carefully about, especially with regard to our Bitcoin positions. If Bitcoin does go up as much as I expect it to, there can be a lot of us sitting with huge unrealized capital gains taxes that can be attacked by evil people like Janet Yellen. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below, as well as be sure to subscribe to the Trader University email list using the link in the description notes below. Thanks a lot for watching, and I'll see you in the next video.